right, guys and gals, back to work. Hope you guys had a fantastic holiday weekend. Let's make some money these last couple of days of the month of May, shall we? Boy, markets are range bound right now. We got some big inflation data coming later on this week. I love range bound markets. Ranges are easy. They give us three pretty simple ways to make money tomorrow. By the time we're done tonight, you'll have an easy roadmap to make some money as well. Before we jump in, though, to my favorite trades for Wednesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out, give me a hell yeah down in the comment section below. Either way, thank you so much for tuning in, supporting our channel. It was a fantastic holiday weekend. Hope you guys got some rest. We got a big week ahead of us. Now, where are the best trades coming out for tomorrow? Nasdaq triple Qs are all ready. Oh, the Emini and the SPY is all ready. I have three really simple clues on these charts right now that are telling us where the winning trades are going to be for tomorrow. One of those important clues is right here on these 60-minute time frames. We are bullish overall on the S&P SPY, bullish overall the Nasdaq triple Qs, but there's one really big clue on this, that strong move down we had after the Nvidia earnings late last week. Anytime we see a strong move lower in an overall bull market, we have to anticipate an attempt to go back and retest that low before we take out those big highs overhead. So we're bullish overall, but don't count these bears out just yet, because that strong move down is one of three very important clues for tomorrow. However, I have two more, I think even more important clues right now on some faster time frames, some tick charts. We're going to grab that in a moment, because those two clues will help us time the perfect entries for tomorrow. Before we do that, though, let's jump into our schedule for tomorrow. Tomorrow is a Wednesday. It'll feel like a Tuesday because, of course, Monday was a holiday. There really isn't a lot of major news tomorrow until that beige book tomorrow afternoon, so keep that on your radar tomorrow afternoon. The big news of the week here, GDP on Thursday, and really the biggest news of the week is that personal income number coming out at 8:30 Eastern time on Friday morning. So beige book tomorrow afternoon, wide open morning tomorrow in our trade room, and we'll come back and we'll talk more about GDP and that big personal income number coming out later on. We'll cover that a bit later on in the week this week, so don't forget to tune back in tomorrow night. But now let's get back to our charts, though, because we talked about those three important clues. One of them is right here on this 60-minute time frame in front of us, but there are two more important clues. They'll tell us how to time the best entries. We know direction. We know we're overall bullish right now, but the 60-minute chart, yeah, we don't trade off time charts. We don't trade time charts or 60-minute time frames in our trade room. I like to use tick charts. Tick charts make entry timing so much easier. This, of course, is a 7,000 tick chart linked up there, upper left-hand corner. And if you're watching for the first time right now, this, my friends, is the 21 EMA. It is pretty much the only indicator you need to find lots of winning trades each week, every morning in our trade room. Now, there are two more important clues here on this tick chart. One of them is this beautiful move up into that trading range. Now, if you know my style of trading, you know we love ranges, because ranges are magnets and they love to rotate down, up, down, up, down, up. The name of the game when it comes to ranges is to buy low and sell high and basically trade fake out breakouts, failed breakouts, using that range as a magnet. Now, there's also one more important clue on this tick chart, and you can see it right here. It's a strong move down this afternoon. Not only do we have that strong move down in the 60-minute time frame we talked about earlier, also a strong move down here later on this afternoon. Anytime we see a strong move down like this in a bull market, we have to anticipate these bears are going to try to retest that low before we make that run going higher. So let's put all three of these clues together. Overall bullish on the 60-minute, a bull range on the tick chart with a strong run down. From what I can tell right now, there are three ways to make money on this tomorrow. One is to buy the dips and buy off support levels underneath that trading range. I have three, maybe four different ways to time the entry, buying that fake out breakout below that low. The other one, of course, is buying a breakout pullback off the high. Breakout, pull back, and go off the high. The third one is a fake out breakout off the high. If we try to run going higher, lots of resistance overhead, look at that fake out breakout off the high. Now these fake out breakouts, these reversals off the high can be very lucrative. We're gonna be careful though, because we're overall bullish. A bit later on in the video tonight, we'll talk about two of my favorite entry patterns to short or trade that fake out breakout off the high. But first though, let's talk about the move going lower here. And then later on in the lesson tonight, we'll cover the move going higher on the Nasdaq and the triple Qs. I'm anticipating buyers are going to want to buy the dips right now, but I have to respect that move down for the bears, knowing the bears may try to run back to this low, and they may make a run back down to that low later on in the week. Knowing that, I want to buy the dip, but what I'll do is I'm going to use what's called a bear trap pattern on a shallow pullback. On a shallow pullback, I want to buy low, right? I want to buy as low as I can. So if I get a shallow pullback, my concern is I'm not buying low where I think the market wants to go. I think the bears want to get to. In these situations, I want to use what I call a bear trap pattern. It's basically one try for the sellers, two try for the sellers. Make sure you get that higher high in price, nice strong green signal candle closing above the 21 EMA. We teach, of course, this pattern inside the free trading course, right? A bear trap pattern inside the free video course. Now, I'd love to get this market running a bit lower. If I can get this back down around some key areas of support below us, now I'm not so concerned about buying too high. My concern now, of course, is bearish momentum. I'm not going to pick a bottom down here. I'm not really that big of a fan of blindly buying at support. I'm going to wait for the bears to come in and try to short this thing a few times. This is not a great place to be a seller. It's a range market. The magnet overhead is a range. We're bullish overall, and we're down around support below that trading range. The last place I want to be a seller, but I'll bet there'll be a lot of rookies that will not see that range above. They'll get short a couple times here, and they can use their stops. Right? Think about this. If you're stuck short and you get stopped out, what happens? You buy your way out of that trade. This will be a failure pattern, and then into, as we go higher, think about that bear trap pattern going higher. It's a higher high in price, a move right below that low. Think about that sequence, right? Think about that sequence. We roll over. Is it a shallow pullback? Shallow pullback, look for bear traps to buy as low as you can. Or do we wind up back to retest the low, or really anywhere underneath that low here? And if we can, what I'll do is it's a failure pattern into a bear trap combination. And remember, the market wants to go where? It wants to rotate. It wants to rotate back other side of that range. That would now be where the target will be on the long side. Now, think about this failure into bear trap combination, because there are lots of variations of this. For example, sometimes we'll run lower. We're going to get that failure pattern. We teach it, of course, in the free video class, right? We'll get that failure pattern. We'll pop it up. But for whatever reason, the move going lower is also a strong move down. The bears come in and they retest that low. At this point, we've got our 1-to-1 first target. It's a profitable trade. Stop moves up to that point of entry, right? It's a winning trade overall, but now we get stopped out on the trailing stop as it retests that low. If it retests that low, this is not a reversal. This is a second bite at the apple. That range above us is the magnet. We're still overall bullish, and again, we'll do it again. Don't pick the bottom on here. Wait for those bears to come in. Try once, try twice. Use that same failure into bear trap combination. We talk a lot about this inside the free video class. And again, we're not picking bottoms. We're waiting for those bears to get trapped in with that failure below the moving average. And again, that bear trap combo as it rolls off of that low. So think about, as we go lower, trap those bears in. Think about those fake out breakouts and keep using that range above you as a magnet. Again, it could be here, really anywhere underneath that low at 96 3/4. And last but not least here too, sometimes there are so many buyers down here. Sometimes we get this big strong run lower and we don't get that 1-2 back up again. Sometimes it just boing right back up again. if I can't get a bear trap, if I can't trap the bears in down there, if all we get is a V bottom off that low, watch this closely, because oftentimes those V bottoms begin to grind. And when they grind like this, the hardest part is simply do not chase after it as it runs higher. Watch closely, draw a trend line off the highs, bring that trend line down off that low, that creates a channel. Now, look left, find some prior swings, and my goal is always, I want the first touch of that channel. My favorite entry on this is a bear trap underneath a prior swing. Sometimes though, we don't have a prior swing to work with, and sometimes it turns into a failure into pullback combination. Now, if you're watching for the first time right now, this may be all a brand new language for you, but this is the sequence I'm looking for. If we V bottom off of that low, draw that trend line top the highs, down off that low. And again, any of the entry patterns you guys are learning could be traps, could be failures, could be pullback combinations as we make our way rotating back up to the other side of that trading range. Now, let's slow down for a second, because I know most of you guys and gals watching right now, you know these patterns, you know how to make money with failures, traps, pullback combinations. You know why we love ranges so much. But if you're watching for the first time right now, this might be way over your head. This may be a brand new language for you. What the heck are traps and failures? Don't you worry, I teach all of these entry patterns. I have hundreds of examples of traps, failures, and a whole lot more. I cover all this in a lot more detail in our free video classes. I'll put a link up top there for you. Don't you worry, upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy you're going to learn in that video series will teach you a stupidly simple trick we use in our members trade room to know where the best winning trades are going to be every day. And most importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, help you start making money out there on your own. Guys, the markets are way too good right now. If you're not making consistent money every day, if you're missing the best trades each morning, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link that popped up there. That will give you an easy roadmap to follow, and you'll always know where the best winners are going to be each day. Also be aware too, I'm going to put all the important links tonight, the description of the YouTube video. I'll put my free class links down there. Definitely start there. We trade together every day in our members trade room, 8 o'clock Eastern time. I'll put all those details in there for you as well. And also be aware too, I post a lot on Twitter, on X throughout the day. If you're on Twitter or X, give me a follow. All details, description of the YouTube video. But most important thing though is take that free trading course, because you'll know more about how we use ranges and how we can trade that rotation back and forth, failures, traps, and a whole lot more. Now, one more thing here. I know folks are wondering right now, if we're gonna get a pullback going lower, could I short this thing during that pullback? You can, but remember, we're in overall bull market right now, and this market now wants to rotate going higher here. How would you sell during that pullback? The best way to do it is a bull trap. Bull traps are very, very simple. As we pull back and buyers begin to come in and try to buy this thing way, way too high up right now, not a good spot to be a buyer in this area. If we start seeing buyers try once and try twice here, keep an eye out for a bull trap pattern on the way down to the area, and then we'll scoop it back up, trap those bears in with a failure pattern right into that. Again, that bear trap combination, that higher high and that trap below that low. Again, bull trap, right? The way you short this thing during that move down. And remember, whenever I'm going against the overall momentum of the market, we're bullish overall right now. Whenever I go against that trend, these are always going to be a half size position, a quarter size position. If you're not making consistent money yet going with the trend, this may be a 0 size position. Let's get you making money consistently going with the trend. And we start picking tops in this bull market. But watch out for, I know many of you guys are very good at this stuff right now. Watch out for the buyers once, the buyers twice. Again, that bull trap off the high, profit off at the low, and then rope in those bears, get that failure into that trap combination. So again, three ways to trade a range bound market. One of them is to buy those dips off support levels below the trading range. Now, on the Nasdaq, let's talk about a breakout pullback. There are two different patterns to look for during a breakout pullback. And again, mentioned earlier, with lots of resistance above, I wouldn't mind a fake out breakout off that high. We got two patterns to look for a fake out breakout off that high. Let's go to the Nasdaq now. Nasdaq is waiting on me right now on the 60-minute time frame. On the NQ, you can definitely tell we're bullish overall, no doubt about that. But again, just as I said before, that strong run down, don't underestimate these bears right now, because that is unfinished business. That 621 half level, unfinished business right now for those sellers. Let's go to the tick charts now. Tick charts, again, we do not trade time charts. We do not trade 60-minute time frames in our trade room. We use tick charts. 4,000 tick chart linked up there, upper left-hand corner, and again, the 21 EMA. The Nasdaq is basically the exact same situation. It's a bull market up right now into a trading range. And again, ranges are magnets. Ranges love to rotate back and forth. We talked earlier about on the S&P, a shallow pullback would be a trap entry with that higher high and that trap below that low. A deeper pullback becomes that failure into trap combination. We talked about if it rolls over in double bottoms, right? Double bottoms in a bull market are fantastic ways to make money. Do not assume a double bottom is a reversal. And again, we talked about that V bottom off that low. Not the most desirable, but definitely something to keep in mind out for tomorrow, because again, I have no crystal ball. My job is to make sure we're ready for no matter what the market throws at us. Now, let's talk about if we go higher here, right? Going higher, we have a lot of resistance up overhead here on the Nasdaq and also on the S&P. Get that big Nvidia breakout going higher. Lots of resistance up overhead here. How would I short this thing off the high? Because, I like that idea here, right? Rotate up, trap in some of these buyers. How would I short this thing? There are two ways to short this. One is that bull trap pattern. We call them crown reversals in our trade room. Buyers try once, buyers try twice. Notice how this one looks, right? It's a lower low in price and a trap right above that high. Again, has to be that strong red candle closing firmly below that 21 EMA. We have a lot of examples of that. Lot more details on that crown reversal pattern inside that free video course I mentioned earlier. So watch out for that pop up, buyers once, buyers twice, and that bull trap back down again. Another variation of this, which is a little more complicated, is to wait for it to pop up. And if we don't get that 1-2 bull trap, oftentimes it will snap back down and begin to grind going lower. If it begins to grind going lower, that is your dead giveaway. Mark off that low, bring it up around the high. I know you guys love this pattern. A lot of emails each week, you guys grabbing these winners. Go out, look left, find some prior swings, and I want to get that first test off the high of that channel. Again, there's a range below us. Ranges love to rotate back and forth, right? Back and forth. So if we make that run higher, run into levels of resistance, and we start seeing that V top where it gets knocked right back down again, that range below us is the magnet. Look for that grinding movement lower. And once it grinds down like that, draw that trend line off the low, up around the high. And again, this could be any of the entry patterns you guys are learning in the free video course. It could be a bull trap, like I'm showing you here. Oftentimes we'll get above that 21 moving average. That's where failure patterns live, right? A buyer failure. Failures, of course, turn into pullback combinations. And remember, the amount above the range, the amount below the range, right? That will be our big target on the other side of that range. So again, could be traps, could be failures, could be pullback combos. I just want to make sure I get that first test of the high of that new channel. That's how we look to sell it as it makes that run going higher. Now, if this thing really punches, if it really begins to rip and run higher, I wanted to think about a breakout pullback of this trading range. First of all, if we start getting this market really racing going higher, you want to think about buying as low as you can, which will always be with you guessed it, a bear trap pattern. We mentioned earlier, a shallow pullback. needs to be a bear trap pattern, a strong run higher. And again, this will be very fast moving, very strong breakout going higher. If that's the case here, it'll always be a bear trap pattern to buy as low as we can. Now, usually what happens is whenever we get a breakout, usually what happens is the breakout leg becomes a measuring leg, right? So think about A, B, C, D, right? So one leg and two leg. That will give us the general idea of how far this market is going to go. I'll get in, of course, on the bear trap entry long. I'll use that breakout leg as the measuring leg, and that will tell us now where to stop buying and also where to take our profit. Now at this point now you want to think about that breakout pullback. Now look left, think about where the tops of that range were, right? Basically what was resistance becomes support. So think about that. The top of the range now becomes an area of support. Now, this is always very important, so pay attention. When I think of a breakout pullback, I think of a two-legged pullback. Now, what's a two-legged pullback? Well, in the free video course series, I talk about measured moves, right? So think about a measured move. When I think about a two-legged pullback, I think about a bit more than a measured move, right? I don't know how big it'll be right now, but that is the game plan, right? That is the structure of that pullback. So again, if we get that strong breakout running higher, think about now that breakout pullback off of that trading range. And again, when I think about a breakout pullback, I think about a two-legged pullback and under the moving average, one leg. Second leg goes lower, a bit more than a measured move. Now, as always, I'm not going to pick the bottom on that pullback. What I'll do is I'm going to wait for another one of those failure into trap combinations. I'm going to wait for the price to pull back to that 21 EMA. Let the bears try a couple times. Why a couple times? Why wait for those two tries? Because again, I want to use their stops to fuel that move going higher, right? Makes sense, right? So stops become fuel for that run higher. We know in a breakout pullback environment, the buyers want to go back up and take out that high, right? So we trap the bears in around the prior high of that range. We use stops to fuel the move going higher, and this is always where on the way back up to take out that high, this will always be, we look for a bear trap. That failure into that bear trap combination, the failure pattern, I'm not so worried about buying too high, right? I can be pretty aggressive on a failure pattern. I'm not worried about buying high at that point. The trap pattern though, at that point, I'm worried about buying too high. And because of that, I want to buy as low as I can. And that will always be useful for a trap pattern. Now remember, if we get up and we start seeing this thing roll over and grind, right? Down like that, no, right? Now you know there's that grinder, find that low, up around that high, right? And short that first test off the high, right? Makes sense? So we may get a very strong run higher, right? We may get that two-legged pullback, but this is where you want to be paying attention tomorrow morning because again, do the bears come in? Do they try twice? Can we squeeze those stops and run back higher? Or do we get a 1, 2, 3 move, a two-legged pullback, and do we start grinding down, right? The grinding down is the giveaway. And of course, once we see that grinding move down, we mark off that low, we mark off that high, and again, we go out, we grab that first test off the high of that channel. That's how you know when a two-legged pullback is going to be bought or a two-legged pullback becomes a way to sell it. It's all about that pop down and the grind, or do we pop down and struggle to keep going higher? That's how we know if we're buying a two-legged pullback or shorting that thing as it rotates back into that range. Because again, that range is a magnet underneath us. All right, guys, that's the game plan here for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making money in these markets right now is to learn and trade along every morning in our morning trade room. I'm going to put all the important links in that description of the YouTube video. Start first with the free class links. And don't forget, any trouble getting access to it, use live chat, call the office. I'm always here. So let's start first with the free video course links, learn the basic strategy. And again, I'm going to be here if you have any questions on the way or want help getting started. Right, guys? Hope you learned a bunch here tonight on the video. Hope you use this knowledge, make a bunch tomorrow morning, and hopefully I'll see you sometime soon trading with us as a new member in the morning trade room at 8 o'clock Eastern time. As always, guys, thanks so much for tuning in. Thank you for sticking around all the way to the end. Now get out of here, get some rest. If you're anything like me, you're dragging a bit after the holiday weekend, so get a good night's sleep, and we'll see you guys hopefully tomorrow morning, sometime soon in the morning room. If not, same time, same place, back here tomorrow night on Wednesday evenings, video news. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.